Hi friends, election fervor is here and everyone wants to know if we'll see a massive rally or a major correction in the stock market. Should you be buying before the election results to enjoy the bull run, or should you wait for the market to correct after the results to buy the dip, to buy the good companies at a discount? Which sectors that will be impacted the most because of the election results, both in the positive side and in the negative side? And which companies in each of these sectors that will see a massive rally or a major correction if the same government comes to the power for the third time or if there is a change of government? Let's find out in this video. Before that, a quick disclaimer. Stocks, mutual funds and ETFs mentioned in this video are not a buy and sell recommendation. Towards the end of the video, we'll be discussing technical analysis of some of the companies discussed in this video to know the support levels to watch out for if the stock market is planning to move down after the election results. And most important point, this video is not about discussing who will win the election results. We are just trying to analyze the impact and consequences of elections in the stock market. If that is very much clear, then let's dive in. So there are three possible election outcomes. Case 1. BJP wins the election results with majority. In that case, stock market should ideally go up and we can expect Nifty to reach levels of 25,000 in the next 2 or 4 months. And in the next 1 year or 2, Nifty can touch 30,000 before facing a resistance and starting its downward journey if there are no major worldwide problems like war and pandemic. This is a very reasonable estimate because of the fact that India is the fastest and largest growing economy in the world. And the target of 30,000 can also be verified using the PE ratio of Nifty. So we can see from the graph that whenever Nifty PE is around 29, it is seeing a major correction. So currently it is trading with a PE of 22, and when the PE reaches 29, we can expect the Nifty to be trading at around 30,000 by using the simple proportional equation. When I check the BJP report and try to understand their promises for our country in the next 5 years, they mention these 5 sectors in the majority of the report. They are defense, railways, renewable energy, infrastructure, and the banking system. And definitely the Adanis and Ambanis will be positively benefited if the BJP government comes to the power for the third time. Now you may be having this one question. Why should the stock market go upside when BJP wins the election? What is the rationale behind that? Now this is where it gets really interesting. I'll explain this concept using a simple narrative. There are many factors responsible for the stock market movement. And out of the 100 things that moves the stock market, 50 things are because of the actions taken by the government. It is the vision of the government to change the economic outlook of the country that is moving the stock market in the long term. But how it is exactly linked to the profits generated by the company and eventually the stock price? We know that the government is the one that plans the budget every year and allocates economic policies that are affecting each and every corner of our country. Let's take the example of interest rate. Suppose if the RBI is planning to increase the interest rate, the inflation in our economy can come down, but also our economy will be growing at a slower rate. And suppose if the government is planning to decrease the interest rate, which is what we can expect in the coming month, can boost the growth rate of our economy but compromises on the inflation rate in our country. The present government has done a good job to keep the inflation levels well below acceptable limits of 6% and also allowing our economy to grow at a decent rate of 6.8%. The next is government is the one that implements the PLI schemes that not only helps direct foreign investments into our country but also helps foreign companies to set up their own manufacturing plant inside our country, which can have many positive benefits. The most important point is creation of new jobs in our economy. Some of the foreign companies that have a manufacturing unit in India include companies like ABB, Siemens, Honeywell, Valeo, Bosch, and many more. And in the automotive sector, we have famous companies like Suzuki Motors, Kia, Skoda, and in the two-wheeler space, we have Honda. Also, government is trying to bring in new players like Tesla and BYD from China to improve the EV market in India. Also, the PLI schemes introduce various incentives for domestic companies to set up their own local manufacturing unit to support the Make in India theme. Long story short, government is the one that plans capital expenditure for the year and allocates the budget to different sectors. These capital expenditures by the government are translated to projects taken by the public and private companies. And when these companies take up the orders and complete the projects, they get the intended revenue as per the contract. And since the government is the largest business partner for these companies, they have projects lined up for the next 5 years. So there is always an increase in revenue of the company. Eventually, these top line growths will result in the bottom line growth and improve the profit of the company and hence the stock price movement. It is very simple, isn't it? You may have many questions in your mind. As you progress in the video, you'll be able to connect the dots to get the complete picture. So these are the companies in each of these sectors that could be positively impacted because of the election results. In infra theme, we have companies like L&T, KNC, Ultratech Cement, Adani Group of Cements, and we have the list of companies that are aligned to the government policy of building rural households across India, which include the paint sector, piping sector, cables, tiles, and sanitary ware. These companies include Asian Paints, Indigo Paints, and in the piping we have Prince Pipes, Supreme Industries, Astral Pipes, and in the FMEG space we have companies like KEI Industries, Havels, Polycab, and many more. And lastly, in the sanitary ware, we have companies like Kajaria Ceramics, Sarah Sanitary Ware, and so many. Although I could have missed some of the fundamentally strong companies, but you get the point. And under railways, we have the famous stocks that gave almost 10 to 20 times returns in the past 4 years, like IRFC, Rail Vikas Nigam, and IRCTC. And in the defense space, we have companies like Hindustan Aeronautics, Bharat Electronics, Solar Industries, and Data Patterns. In the renewable energy space and in the EV infrastructure theme, we have companies like Tata Power and Adani Group of companies again like Green Energy and Energy Solutions, and also companies like ABB, Siemens, which are involved in the manufacture of electronic products. Also, I came across a company called Sterling and Wilson, which is involved in the EPC of solar plant installation in a large scale, and recently Reliance has picked up a stake in this company, which I will be discussing in detail towards the end of the video. And finally, the banking space. We all know that the currency is printed by the government and it is circulated to the economy through the banks. Hence, banks are the backbone for every economy. And if the BJP government wins the election, it is certain that PSU banks can continue their rally ahead. It is because of the simple fact that government owns a majority stake of up to 75% in each of these PSU banks. But also keep a close eye on the private banks which have underperformed over the years, and it is expected to catch up with the performance of PSU banks. The next scenario could be BJP wins the election but falls short of majority and forms a coalition government with the help of NDA alliance. If that's the case, stock market can see a short-term correction or consolidation for a few months. But in the long term, the sectors discussed before are bound to do better. But why is it so? This brings me to explain the second fundamental principle of stock market. There could be many reasons because of the stock market movement, but end of the day, who is controlling? It is we humans, and we humans can be rational, and hence the stock market. It doesn't behave the same way all the time. It is like a simple analogy. Does your partner behave with you the same way all the time? Mostly not. Sometimes they are very nice to you, and sometimes even the small things can irritate them. I learned this from a famous stock market educator, P.R. Sundar. And there is a very famous saying in the stock market: when everything is going good, even a slight bad news can bring down the markets. And in the contrary, when everything is looking really bad, even a slight positive news can trigger the markets to move upside. So if the market expected the BJP to win with the majority, end of the day win is a win. But if it won with the minority, then it is perceived as a bad news, and the stocks which have rallied in the past can see a short-term correction. It can also be because of the fact that their PE ratio is unreasonably high, and certainly companies in the defense and railway sector fall into this category. If the profit has grown 2 times in 4 years, and if the stock price has jumped 20 times in the 4 years, then the equation does not match. Okay, let's continue with the next scenario. Guys, please take a moment to like this video and comment your thoughts below the video. And maybe a simple thank you can greatly motivate me. Also, you can get in touch with me daily via the community app where I post market updates and technical analysis of various companies. Having that said, we have two more things to discuss: the chart pattern of some of the companies we mentioned so far, and jumping to case 3. What if India coalition led by the Congress manages to get over the halfway mark? That is, if Congress wins the election. This will be taken as a big surprise to the stock market, and we can see a massive sell off, and Nifty can see a downward trajectory of up to 10 or 15 percentage. And the sectors which are already overvalued, which we already mentioned, can fall sharply. But again, why is it so? Is the market biased? Why it should react negatively when BJP loses the government? This brings me to the last two and the most important fundamental concepts of stock market. Remember, we said out of the 100 things that could move the stock market, 50 things are because of the actions taken by the government. And in the remaining 50 percentage, the majority 40 percentage of the market movement is decided by FIIs and DIIs. And maybe the remaining 5 to 10 percentage are decided by poor retail investors like us and some HNI people. But how is this connected to our discussion? It is because of the simple fact that market does not like uncertainty. What is uncertainty and why there will be uncertainty can be explained using this simple narrative. So as we discussed earlier, the vision of our government can make or break our economy. And if there is a change of government, it is obvious that it has its own vision for our economy, and it can be quite different from the previous government. So it can introduce new PLI schemes, it can implement different economic policies which are not the same as the before government. They can very well come up with a new plan and allocate capital expenditure to different sectors. And suppose after the elections, if they come up and say, no, defense and railways are getting too much capital allocation and it has to be reduced. We are planning to divert these investments to education and healthcare sector. Then what could be the immediate reaction of FIIs and DIIs? They will obviously pull their capital from sectors like defense and railways and reallocate to hospital or pharma sector. So it is not very much clear that what the new government and what are their new policies. And also I have gone through the report of the Congress government, and there were many promises that were quoted, but it is still not clear about which of the sectors that will be in focus if they come to power. And also because of the reason that we retail investors have a daily turnover of 50,000, maximum 1 lakh, and if you take the case of HNI people, it can be up to maximum 1 crore. But the volume of capital traded by FIIs and DIIs can be as high as 500 crores or 1000 crores in the minimum. So they are trading in large volumes, and when they press the sell button, the market falls sharply. And it is because of this uncertainty and the selling power of these huge FIIs and DIIs will be the reason for the market downfall. And that is what is broadly predicted among major investors. It is very important to note that market is not specifically aligned to a particular government. It is the stability of the government that the market likes to have. Although we can see a sharp fall in the market, it will eventually recover from the lows, and the short period will be observed only as a glitch. And in the long term, I believe Indian stock market is bound to grow higher. The sectors to look out for in this scenario will be pharma, hospitality, IT sector, and private banks. So the overall data available with us is very confusing. On the one side, Amit Shah is insisting investors to buy before the election results because the market will rally higher after the election results. And in the other side, FIIs are selling heavily because they don't want to carry this risk of uncertainty. But positive thing is that DIIs are consequently buying in our Indian economy. And in the March month, they have recorded maximum numbers. Okay, let's quickly check the chart pattern of Nifty and some of the companies we mentioned. So these are the support levels to watch out for if Nifty is planning to move down. The first target is 21,300. and it can go all the way up to 20,000 and decrease by 13 or 15 percentage if the outcome is not in favor of the stock market. I believe that the gap formed here will be filled when the market is planning to move down. Let's jump to Bank Nifty analysis. And Bank Nifty chart is looking really scary. It can jump either ways and it can jump aggressively, because we see this is a narrowing trend, and if it breaks out it can go very much higher, and if the situation is looking gloomy, Bank Nifty can break this level and fall apart. We just have to wait and watch. Jumping to some of the companies we discussed in the video. Let's take the scenario where BJP wins the election. Then definitely PSU banks will be in focus. And the first stock in our list is Indian Overseas Bank. We can see that the stock is still recovering from its past tragedy, and it is slowly and gradually moving higher. And once this U shape is completed, we can very well expect the stock to reach target 2, which is around levels of 180. And the next PSU bank which is looking very attractive is the Canara Bank. This PSU bank also faced the same issue, but it managed to reach near to the all-time high, which was made back then in 2011. And if BJP is able to form the government for the third time, then definitely we can expect the stock to give a minimum run up of 25% or up to 40% to reach its previous all-time high. Or you can simply bet on the PSU bank index itself. We will check a ETF in this category, which is Nippon PSU ETF. We can see that the overall index was itself in a downtrend, and only after COVID we can see huge volumes and the PSU sector is moving higher. Suppose one would have invested in the PSU index during 2010, he would have just got 32% by now. Generally, the performance of PSU banks have improved a lot, and it is a underperformance over many years. And if BJP wins the election, this sector is bound to grow big time. Let's check some companies in the infrastructure sector. We have Prince Pipes here, and it has generated over 10 times returns in the last 2 years. And now it is consolidating within this region. This is nothing but a flag and pole pattern. Usually such a pattern formation will indicate the movement of the stock price in the same direction. It should be possible for the stock to move out of this region to move higher. Next is KEA Industries. This stock is just looking like a rocket moving higher. I have no words for this. It has generated over 20 times returns in the last 4 years. I will do a separate video to analyze such companies which are always trading near to the all-time high, and it is always moving up and above. And we have done a separate video regarding the infrastructure space where we discuss companies like L&T and Ultratech Cement. And in the previous video before that we have discussed about Asian Paints. Let's quickly check Tata Power from the renewable energy space. So Tata Power was able to break out from this box formation, and it is now comfortably traveling in an uptrend. It is very likely that the company will follow the same trend in the upside, and you can consider to invest in this company in a systematic manner whenever it is trading near to the bottom trend line. The next company is Sterling and Wilson. Recently, Reliance Industries has picked up a stake in this company, and they are associated with the solar and renewable energy theme. So we can see that the stock moved down after its IPO, and now it has recovered its losses and it has almost crossed its all-time high. I expect the stock to do a retest before bouncing back higher. So you can choose to invest when it retests and appears near to this support line. So let's talk about the companies that could benefit if the BJP fails to form the government. So this is the chart pattern of IT index, and we can see that it is trading at a discount of 15% from the all-time high. It is making lower highs but simultaneously making higher lows. Prefer to invest in this sector whenever it is trading near to the bottom trend line. And also understand that IT sector movement is directly linked to US markets, importantly Nasdaq. And also I believe the private sector banks to do better if this is the scenario. And we have discussed two major private banks from Nifty 50 in one of our previous videos. Let's quickly check one more company from the healthcare index. We have Max Healthcare here, and we can see this is one of the most formed pattern in Indian stock market. And here we can can see one such category, which is the bullish triangle pattern. So this we can see is a narrowing trend where it is making lower highs and higher lows. Usually such a pattern exhibits a scenario where it continues to follow its previous trend. So the stock has generally been in an uptrend since its IPO. So I expect the stock to move higher from this breakout level. And these are the set of stocks that could be impacted because of the election results. So you are fully set to face the election volatility. So this is your last chance to stay in touch with me. So go ahead, what are you waiting for? Please hit that like button and subscribe to my channel. And I promise that I'll improve the quality of the video going forward. Also make sure to check the daily market update in the community section. See you soon in the next video. Until then.